today's session, ladies and gentlemen. I would want to start right away with this topic number 12. I would have wished to continue with the syllabus. I like covering topics the way they follow each other or the syllabus. That is my always approach. But because I don't have a whiteboard today at home, then you will be able to allow me to skip and then we cover this theory topic. This handout, I'll be able to share it with you after our class. So Islamic finance. Now, ladies and gentlemen, before I start reading this particular handout, it will be very important for you to appreciate the fact that Islamic as a religion is premised on what we call fairness. Yeah, you'll not get in this case here, most of these Islamic, even the richest people trying to tumble on, trying in this case here to muzzle everything from the poor. If you look at these conventional systems, ladies and gentlemen, for example, you get somebody giving someone 1 million Kenya shillings, and then they tell you that every month, give us 20% interest every month. So month number 1, you give 200,000. This poor man, month number 2 gives 200,000. By the time you're doing the 5th month, you've given this person 1 million Kenya shillings as interest, meaning that his principal amount is still intact. In many cases, in these conventional systems, like the share-locking systems, you may end up paying interest, which is much higher than even the principal. This man, wherever he is, he doesn't want to work. And that is really something that Islam is really against. Islam is for every individual to sweat. Every individual has to work to earn a living. You cannot have a situation where, for example, your father left you with lots of money, so you have capital here, and then what do you do at the end of the day? You simply keep on lending that money, and then the money works for you. Islam doesn't work like that. Islam is about equity, fairness. And we shall be able to see that really that is the bedrock of Islamic finance. Now, ladies and gentlemen, it's quite a lengthy topic. I'm sure so many guys just take it anyhowly. It has 13 pages in total, but fortunately, most of these pages basically have past paper questions. This is what I like. Past paper questions. Over 10 past paper questions. Once we tackle them, then we'll be very good with this Islamic finance. Ladies and gentlemen, I hereby begin. Justification for Islamic finance. Why in this case here should we go for Islamic finance? Why is it that, for example, Dr. Joshua Ura here is a Christian, but whenever I want a loan, for example, I will go to, I used to go to this great Islamic finance, First Community, but it's not doing very, very well nowadays, but has given me loans severally. So it's a Muslim bank which is open to even Christians. We call them ethical investors. If you're an ethical investor, then go and borrow from these banks and you'll be able to see there is a big difference between their models and our conventional models. Conventional means what? Christianity, banks, UK banks, etc. Justification for Islamic finance. Islamic finance refers to a financial system consistent with the principles of Sharia, Islamic law. It prohibits interest riba, gambling, what we call maisir, and excessive uncertainty, garar, while promoting fairness, transparency, and shared risk. Ladies and gentlemen, if you get anybody who is professing Islamic principles, and then you get this gentleman or lady telling you that they are betting, straight away that is a person who is going against Sharia law. Islam members are not allowed to bet. Gambling is bad. Because for a Muslim, for them to invest, they have to know what are we going to get at the end of the day. And as we're going to see, ladies and gentlemen, most of the investments are asset-based. They don't like buying, in this case here, air. All right. Like when you gamble like that, you're putting your 100 shillings and then you get 30 million because of just a favor chance. No, no, that's against Islamic principles. All right. So justification rationale, the key motivation behind Islamic finance is to ensure that all financial activities are ethical, socially responsible, and compliant within divine law, Sharia. It promotes equity, that is fairness, discourages exploitation, and encourages productive and asset-backed financing. The key thing, ladies and gentlemen, in this case here is what here? It encourages, it discourages exploitation. I have taught so many students of mine who are Muslims. These guys will come and do CPA at RCM. Yeah, when you meet them after, say, 8, 10 years, they're pushing very big machines outside here. Yeah, they own buildings. And then you ask them, how did you get to this level? And those of them, of course, who are, transparent as per what the religion says, they'll tell you, Mwalimu, as we believe in partnerships. Yeah, that in this case here, I got an uncle of mine who is in America. Yeah, and he was able to get us this kind of money and we invested. So even this person who is in America will not be conned because of how Islam works. And in most cases, even their contracts are never documented. Yeah, somebody will be able, they want, for example, to raise a 17-floor building. Maybe there are 17 of them. Yeah, they'll simply say, give us 5 million, 5 million. Everybody give like that. And then everybody will be knowing that this is my floor. So even if this gentleman investor is living in a very, very far away country, every month, if there is rental income coming from that particular building, his portion, he will still get his full amounts. So the level of trust that is in Islam is unparalleled. I've not tried looking at other religions like Judaism, but I know Islam in terms of trust, those guys are way up there. They're way up there. I'm so sure here, even in this particular class, if, for example, we get into some partnership with a ninja here, I don't want to call out names, but if I give in this case here a great ninja like 5 million Kenya shillings here, and then I tell this ninja, go and invest in this kind of a venture, and then you give me back my money. And of course, in this case here, something on top. In Islam, they don't talk about interest. They talk about partnerships. They talk about profit sharing or even loss sharing. Do you think in this case here that there are chances I will ever get my money back? Please be very honest. If I was to give somebody like 5 million, I like what David is saying there. Yes, without any contract. Are you sure, David, you are honest? Are you sure you're honest? Let's be honest with each other. Let's be honest with each other. Let's be honest with each other. And I'm not talking about you as an individual, but generally outside in Kenya, ladies and gentlemen, I want to believe you guys are not honest. Ladies and gentlemen, Caro, I think there you are. Do you want to tell me that out of all these guys who are in my meeting today, there is nobody who has ever been conned? That you gave out your 20,000, 30,000, that is the last time you saw of that guy. He doesn't even pick your calls. It happens in Christianity. Big time. Big time. They normally say dust is constant. That if, for example, I want to lose you as a friend, let me give you money. And then that friendship, I tried partnership. Now you can see now you're talking. You can see now we are talking now real things. We are finance people. Let's talk real things here. Okay. All right. Even Muslims, if, for example, we have a Muslim here, they also tell you that it's not all of them who are very honest. We still have a small percentage, like 10%, 10%. Yeah, a very small percentage of Islam, also members of Islam, who are not doing very well. But most of them in this case, ladies and gentlemen, they are very, very honest in their dealings. And it's not only honesty in terms of money, even in marriage. That is why if you look at, for example, the HIV prevalence in all these counties, the northeastern counties HIV is, less than 1%. Less than 1%. Whereas when we look at some counties, I mean, somewhere here, we're looking at a whole more than 10%. Why? Because of what here, if it's Islam and you feel that you can manage to have like 4 wives at the same time. Okay. We shall overcome. Yeah. Tabi, yes, I'm telling you the truth. You know, fortunately for me, I was brought up in a military camp, Nanyuki, 10 engineers battalion, and I even attended madrasa. So I know quite a lot about Islam. Yeah, they allow Christians to open accounts with them. Yes, Caro, they allow. And I'll be able to recommend which one in this case here you shall go for by the end of this session. Okay, great. So we shall overcome. Don't worry, we shall overcome. Don't worry. I know my students, whether now you guys will be members of Islam or even Christians like myself here, after this session, all of us will be able to borrow a leaf from this Islamic Sharia law. Good things we borrow. Yeah, especially this concept of exploitation. You get, like, for example, you are doing very well as a business, earning 10 million, 10 billion, like that, but you are paying your employees 5,000. That your employees in this case here will have to walk from Madare area to industrial area here on foot, of course, simply because they're not doing that because they would want to exercise. They are doing that because they cannot afford bus fare, and yet you are even much younger, but now you are pushing big vehicles because simply you own the capital. That is the kind of exploitation that Islam is against. We are all of us human beings, and before the eyes of God, in this case here, that is why whenever they go to the mosque, they cannot say that this one here is a minister, this one here is a what, that you're given a special chair. Nothing like that. That only happens in churches. In Islam, you will sit down just like anybody. When in this case here, for example, they are eating, guys, I mean, even before COVID, I mean, it used to be even better before COVID. These guys here would bring what we call a sania, and all of them in this case here would even eat regardless of your status in the economy. It doesn't matter whether you're a minister or who you are. It's about equality, equity. Historical background. It promotes equity, discourages exploitation, and encourages productive and asset-backed financing. Ladies and gentlemen, we as African nations, Kenya leading all the way, we have gotten it wrong, for example, with our Eurobond financing. Remember, Eurobond financing is whereby you make use of bonds to borrow from international markets. There is a time in this case here, like over 10 years ago during Uhuru's time, we used to get Eurobond monies, 200 billion, 400 billion one time, I remember. I even remember the late Honorable Raila Odinga coming and saying, no, this money has not come here in Kenya. That this is that amount of money, if it was to land in Kenya, you would even smell it. It's a lot of money. People in this case here told this guy, you are a muganga, whatever. But later on, what happened with the Auditor General? They started telling us that this money was not even coming through central bank. People were opening private accounts outside there. If we were to borrow using what we call sukuk is Islamic-based financing bond. Sukuk, let me write here. Sukuk, S-U, sukuk. If we borrowed all those trillions using sukuk, which are Islamic bonds, I'm telling you, Kenya today would be very rich asset-wise. Because Islamic finance is asset-based. These guys will give you money and they would want to know which asset are you going to invest our money in, because their Sharia law guides them on some assets that they can never put their money in. So then they would give, like, say, for example, 400 billion, and then they would be told that this 400 billion is going to build, for example, this road from me. They must send their people to see to the last coin whether that money is really getting into that road. because their financing is normally asset-based, not like these euro bonds, like the ones we got money from Germany, Britain, in this case here, US, and they never followed. And that is why you see these Bretton Woods institutions like IMF, World Bank, they have really messed these African nations big time. They have given us loans, which they don't even care whether that loan is being used on their intended purpose, loans that will be paid by our great grandchildren. And they're not following because somehow they tend to benefit because of corruption. How do you give somebody who has come with a very good blueprint, feasibility report, that would want in this case here to build this kind of a thing from here to here, and then at the end of the day, don't even follow to see where that asset was really implemented? That's wrong. Islam is not like that. And trust you me, for the last like 10 years, I've always seen it on paper. The government of Kenya, Minister of Finance, always saying that this year we shall go for sukuk bonds. This year we are going to borrow from Muslim nations. I'm telling you, I know that will never happen. Do you know why it will never happen? Your guess is as good as mine. Because most of these loans, whenever they are given out, first of all, there will be kickbacks. Islamic law does not allow kickbacks. Islamic law will follow to see in this case here where their money is going, because their money can never go to brothels. Their money can never go to building, for example, bars. No, that will be haram. And once you engage in an haram project, then you cannot see heaven. Sharia law is really, really strict. Yeah, Chris, thanks. Yeah. So justification, Islamic finance principles date back to the 7th century, derived from Quran and the Sunnah. Early Muslims practiced profit sharing. This is the best arrangement, where the lender of the money and the borrower, they don't get into interest payment situations. They're partners in business. Yeah, so profit sharing arrangements such as mudaraba and the musharaka. Later on, we shall be seeing mudaraba is basically that kind of an arrangement where a rich man, for example, today, because of my, of course, age and what I've been doing, perhaps I could be rich a little bit richer than some of you, not all of you. There must be a ninja here who is richer than me. So assuming in this case here, for example, I'm a little bit richer than Mohammed. I'm just using that as an example, Mohammed. Yeah, you see, and then we tend to get into a business where now Aura here, we call him, in this case here, Aura here, who is now richer, provides capital. So for example, I give 5 million Kenya shillings into this venture. Mohammed does not have money, but he has skills to run a business. Islamic principles have been able to come up with a very, very good terminology and concept for that kind of an arrangement. It's called mudaraba. Mudaraba. So under mudaraba, this rich man who has provided the capital, yeah, and this other guy who knows business but does not have capital, they are getting into some kind of a business where they shall be able to share profits. At the end of the year, Muhammad will come and produce his books and say, Dr. Aura, we've made 3 million. I'm just exaggerating. And then, of course, in this case here, we have our pre-agreed proportions of sharing this profit. In most cases, 50-50. Because you see, these guys have been in the business for long, doing that business. Yeah, so I get my 1.5, he gets his 1.5. Yeah, what will happen in this mudaraba arrangement if, for example, this business was to declare a loss? Islamic is all about equity. Ladies and gentlemen, if we declare a loss in this business, then the rich man, the provider of capital, who in most cases is the bank, absorbs all the loss. The poor man who is running the business there can never absorb any loss, because Islam is not about sinking people, in this case here, with little means, even down further. No. So somebody who has got big shock absorbers, you take the entire what year, you take the entire loss. It's called mudaraba. And then we have musharaka from Kiswahili word kushirikiana. So under musharaka, the rich, not even rich, these two partners, A, B, each one of them will provide capital. Each one of them provides capital, and each one of them will be involved in running the business. So in this case here, they do capital contributions, and they also contribute their expertise and the time and the resources to run this enterprise. That is musharaka. So now musharaka, depending on the profit sharing, you should be able to share. And if it is losses that are generated because you contributed capital, if you contribute capital, you are rich. And if you are rich, then you have shock absorbers to absorb losses. You also absorb losses. So, and we're being told that this system started from the 7th century. Long time ago, ladies and gentlemen, here. Yeah. In modern times, we have here Gamri Savings Bank in Egypt, 1963, pioneered Islamic banking, followed by Dubai Islamic Bank, 1975. For those of you who understand the history of Dubai, including how it is a free port, right? They know how Dubai Islamic Bank has been instrumental into the growth of what here Dubai as a nation in this case here that was basically a desert some few years ago, right now is a small heaven. It is hosting some of the tallest buildings in the world. All right. So we have other institutions and we'll be able to see them down here. The standardized global practices. In Kenya, we have the Gulf African Bank. First Community Bank used to be my biggest bank, best bank, Islamic Bank. But right now it has got issues, and I'll be able to explain why it has got some issues. Our early adopters. So core terms and concepts, very, very important in your exam. We have a halal. Halal is anything permissible under Sharia. You see, like, for example, in this case here, Muslim, they don't eat pork. P-O-R-K, nguruwe. They don't eat pork. So then that is a haram. It's prohibited. So haram is prohibited under Sharia. Even this Muslim, of course, I know there are some of them who take alcohol, but it's wrong. It's haram. They are gambling. It's haram. Even some of them will tell you that, Mwalimu, I don't take alcohol. I only take mirah. That mirah is allowed. Even that one is haram. Anything that impairs your judgment, yeah, your judgment, automatically that is a haram. Riba is interest. Interest or predetermined return. This as well is haram. Interest-bearing loans will never be accepted. Garar is a lot of uncertainty in contracts. Ladies and gentlemen, I would want you to get, for example, a contract coming from an insurance company in Kenya. You go and pick any contract. Yeah, for example, you've started paying some money for your child. Yeah, into an insurance company. So they'll tell you this, you'll be able to pay for, say, 10 straight years. But the terms and the conditions down there, look at even the writings. They write those things in a way that, I mean, you will not be able to read everything there and then. That is against Muslim principles. If you go to any takaful, they call them takafuls. I have one takaful. Their terms and conditions, ladies and gentlemen, are written on the very, very same font that all these other good things that they would want you to see are written in. Takaful. Let me write here, takaful is an Islamic-based insurance companies. Takaful, like that. Takaful like that. Yeah, because Islam is all about transparency. We don't want to hide anything, and then we come to bring these things later when we default. Islam is all about, even in Islam, let me tell you something, because I've really dealt with a lot of Islamic finance products. I mean, you see, like, for example, how you go to borrow a loan, say from a bank. I won't name them outside of this conventional bank. Let me call them conventional banks. These guys will push you. They have given you like booklets like this. Yeah, they don't want you to even get to see. First of all, those writings and the conditions and the terms, those writings are too tiny. But that notwithstanding, again, they would want you, like, say, 30 minutes to even see those wakilis, lawyers telling you, I mean, we have other issues. You just sign. Islamic contracts, those guys will give you contracts. Go with these at home. Read them. Take like even a whole day, depending on your emergency and agencies. Take a whole day, take a week, take a month, and then you come back. You come back when you have understood everything. Because Islam is about transparency. Transparency. There are no much uncertainties. No much uncertainties. They try to reduce uncertainties as much as possible. That is a concept of garar. Yeah, uncertainty in contracts here, where basically they'll do what we call short selling. Yeah, they have you know, like most of these conventional banks, they will ensure that they hold the bigger side of the stick, and then you are holding the smaller side because now of what? Yeah, that exploitation. They would want to milk you dry to your deathbed. Very, very bad. That is against Islam. That's against Islam. Yeah, there is this ninja who is inboxing me that, Mwalimu, are you marketing Islam? No, no, no. You are lost. Yeah, I told you I will teach this thing the way it is in your syllabus, and I'll be able to state things here truthfully. And then, of course, you guys, like even myself, who is a Christian, there are things that we can borrow from here. Yeah, I'm not marketing any religion. No, no. Then we have in this case here usury. User, even from the word user. This is that interest being charged by Shylocks. Yeah, and fairly high interest rates. What we call predatory lending. Your syllabus needs me to discuss capitalism, which we exercise here in Kenya in most cases, versus Islamic finance. And remember, capitalism is this system that is being run by capitalistic states. Yeah, people who have capital rule. They rule. What is their major objective? Is to maximize profits, even if they're going to kill you. Yeah, it doesn't matter whether you have begun this business with them, and then unfortunately you caught some bad disease like cancer. Even if you have cancer and you have a loan, you have to pay. That's against. Yeah, for Islam, the major objective here is ethical and social welfare. Ethical and social welfare. Interest in capitalism is allowed. Interest in Islamic finance is prohibited. Yeah, risk distribution. In Islamic finance, you share risks. That's why we share profits. If we make profits, we share the profits. If we make losses, we share the losses. Or better still, if it's Islamic finance under Mudaraba, I'm the one who is a senior there in this arrangement, then I take the loss myself. But in capitalism, the risk distribution is unequal. In most cases, it is borne by the borrower. It's borne by the borrower. If you're not able to pay, if something goes wrong in terms of this business you have begun, you can even lose your home. Yeah, you lose your home. Investment basis, capitalism is about speculations. Yeah, speculative and interest based. But when you talk about Islamic, ladies and gentlemen, in this case here, the investment has to be asset backed. And in this case here, our investment has to be very, very productive. Very, very productive. We need everybody to produce. That's why you will go to Isli today. Muslims are very, very active over there. People are working. They have shops. They're selling. All right. Moral basis. In this case here, we have what we call market freedom. Yeah, market freedom. You can do whatever you want. Yeah. And then, of course, moral basis for the Islamic, ethical, and the Sharia what here? Compliance. Ethical and Sharia compliance. Benefits and deficiencies of Islamic finance. Benefits, ethical and moral financial system, promoting fairness and justice. Risk sharing between investor and entrepreneur. Asset-backed financing, minimizing speculative what here? Risk. Remember, speculative, mnaekelea uone. No. Here, ladies and gentlemen, under Islamic, as we give you our money, in this case, you would want to know which asset are you going to buy with this money. It's asset backed. Financial inclusion for Muslim and ethical investors. Remember, before these Islam banks came on board, Muslims in this case here were not opening accounts easily. And even when they opened accounts, like I remember one time I was just queuing next to a Muslim who was going to withdraw some money at the bank at Equity. Yeah, so when it reached his turn, I mean, this guy said, I've been contributing this, was it 5,000? Yeah, 5,000 like that every month for this number of months, for this number of years. He asked for his principal amount. And then he told the teller there, whatever interest is on top, you keep it, keep it, keep it. So in most cases, what members of Islam used to do, they never used to have these conventional banks. They were left out of what here, out of the banking system. But nowadays, with this Islam finance now we have inclusivity, financial inclusion for Muslim and ethical investors. Relative stability during global crisis due to low speculation exposure. Ladies and gentlemen, remember most of these Muslim countries, even whenever there are global crises, you will never see them crying a lot. No, no. Islamic countries, including our neighbors here, Somalia. I'm telling you, ladies and gentlemen, if you ever get a chance to just go across here to Somalia, yeah, you know, there are Somalia states which are really very, very peaceful, like Somaliland. You'll be surprised the kind of things that are happening there. I mean, as you guys are boasting of M-Pesa here, those guys knew about those kind of products they started using them long time ago. And theirs is really, really up end. If you look at the kind of agricultural produce they make, look at, for example, not fertilizer, but charcoal. You go close by the ocean, they have a very big beach front. Yeah, those guys are really, really active. They are never affected. I'm telling you, were it not for war that we normally see, which are unending in those nations, and of course, we know all of us, it's because of what here? It's because of the resources which are over there. Now, there are so many predators coming all over. Yeah, including some of those also greedy Muslim members. Some of them are greedy, yes. They're destabilizing those countries, but those countries are really, they cannot be affected. They cannot be affected totally. All right. So they're relatively stable. Deficiencies, stroke challenges, limited awareness and expertise among stakeholders. Yeah, not so many people are aware, and we lack also expertise to be able to run with these Muslim financial products. Regulatory inconsistencies across jurisdictions. Yeah, so I don't know whether there are also some gaps, maybe in the Sunnah, yeah, or Sunni, they're quite different as well. You'll get even some of them coming and telling us that, hey, we need in this case here to break fasting on this day. Another group tells us so there are quite inconsistencies. Yeah, you'll get in this case like Dubai Islamic Finance. When they have given you their money and you make a loss, they'll accept that loss. Yeah, but some of this like Fast Community here, they may tell you, I mean, they're not practicing full Islamic finance. Because under full Islamic finance, like how the Dubai Islamic Bank, they simply assess your prowess in terms of doing business. They look at your financial statements. Once they realize that you are very, very active, you are aggressive, then they give you money. Should you make a loss, they will tell you straight away, this one was unforeseen. And because in this case it's Mudaraba, then the bank will be able to take full responsibility for the loss. So they only do screening. Are you a good businessman? If you're a good businessman, then they give you the ball. They tell you, run with it, run with it, run with it. So we have here regulatory inconsistency across jurisdictions, limited product diversification compared to conventional finance. So you get, for example, the Muslim finance, as these other conventional finance systems, we happen to be having products like money market funds, MMFs. Islams, they don't have those. So their products are still what? Yeah, very limited. Higher transaction costs due to compliance requirements. I mean, there are people who come there and, I mean, so as you borrow, the initial cost is a bit higher. Liquidity management constraints in interbank markets. We have what we call interbank markets. Ladies and gentlemen, every evening, we know that banks are required here to return. Yeah, nowadays it has become quite easy. They're supposed to be taking whatever excess amounts they have in their banks to central bank. Yeah, for overnight storage. Nowadays, at least the law has even been eased a little bit for these banks. So assuming, and then of course they had a minimum. They had the minimum amount required there to be deposited. Yeah. So then they would engage into what we call overnight lending. If, for example, you are short of the money that is needed, then another bank, it's a bank markets, another bank gives you money and then you provide interest. Now you see, the Islamic banks, they are few. They'll not be able to do that overnight lending between themselves. So they may want, in this case, to collaborate with these other conventional banks. But now remember, the conventional banks would want interest. So really that limits them. That limits them big time. So you may forget about so many things, but don't forget about awareness. Not very many people are aware about these Islamic products. There are regulatory inconsistencies. Their products are fewer, higher transaction costs, and then we have liquidity management because of what here interbank markets. Then we have principles underlying Islamic finance. Prohibition of riba, interest. Money cannot generate more money without effort. We want everybody to work. Like myself, I'm working here, I'm teaching here. I will not be happy that, for example, I inherited from my father, like say 500 million, and then mine is simply to start hooking that money as other people work for me. Then that automatically means that we are slaves. Just like these Bretton Woods institutions like World Bank, how they're giving these African nations money, and now we are sweating to repay back. That is modern slavery. Yeah, prohibition of haram investments and lawful, excluding, yeah, the Sharia law excludes alcohol, gambling, pork, etc. The other biggest principle of Islamic finance is ethical and socially responsible investing. Supports community development. Community development. Yeah, risk sharing. Parties share profits and losses fairly. Then we have asset-backed financing. Transactions must involve tangible assets. In Islamic finance, every financial transaction must be linked to a real, tangible asset, such as land, vehicles, machinery, or commodities. This ensures that financing supports productive economic activity and not pure money for money speculation. What happens in these other banks, ladies and gentlemen, you even get a ninja here who simply goes to Equity Bank and they're able to get a million Kenya shillings. Yeah, and then they don't even follow to see whether you're going to invest in these assets, in any asset. They simply give you a million. And because most likely some of us, this is the first time we are getting this a million in our hands, what will happen? You will get yourself in this case here that all these coins flew away off your hands. You even never got to handle them very, very well. All those coins flew away. The next time you're waking up, you have a loan to pay. That is against Islam principles. Financial transactions under Islam, lending, they would want you to give them an asset, show them an asset. Tell them I want to buy this vehicle and why. And why. That is why most of these Islam members, they start owning assets quite at an early stage. And once in this case here, you are able, ladies and gentlemen, to have some of these assets at a very, very early stage, then you will be good to go. There are things you need to do when you are young. There are things you need to do when you are young. Are we together? I will share. Yes. Sorry, I'll share. Yeah, with loans in Islamic, do you have to save for 3 months first before you qualify? Yes, 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 yes. Or even more, even more, even more. Because you see, mostly they give you business loans, asset loans. Yeah, they will want to track your history, really. So are we together up to here, ladies and gentlemen? Great. Thank you so much. Thank you so much. Great. So you need to own some assets quite early in life. Quite early in life. Yeah, that is why when I see young men, ladies and gentlemen, at times I cry. You get somebody in this case here going to a club. Yeah. And then in this case here, you get them spending how much? 50,000 in a transaction simply because you want to please people. If you're a young man, you want to please a few people here and there, and then you spend 50,000. And then the most unfortunate thing, like there's a student, some students here who took me some time back to Quiver. Quiver is along Thika Road. You know, at times they You know, the way I talk with them, Chief Ninja, Ninja, etc. So they think I'm their age mate. So when they call me, of course I'll go because it's only lunch. So over there, I mean, when these guys asked for some drink, this drink was escorted by girls. I mean, like Oman color. Even the DJ stopped doing what they are doing. They were like looking at our table. Then I wondered, how special is this young people here? When it came to payment of the bill, foods and everything, we were looking at something like 80,000. I almost cried. I almost told these guys that you guys are financially illiterate. I'm the one who taught you financial management. And I'm not saying that we should be mayeng or not girls, okay? And I'm not saying that we should be very, very mean. This life is for the living. We need to enjoy. But at what stage should you enjoy? At what stage should you enjoy? I don't think it should be at your very, very formative. Yes, like myself, this particular, I have a very good building. Yeah, very good building, very nice building, 3 floors where I live alone. And I built it at the age of 27 because of what here? Financial prudence. I became a member of Mwasibu Sacco. And when Mwasibu Sacco was moving around, ladies and gentlemen, in this case here, buying plots, we really bought those plots. I remember like among the Runda projects, I was able to buy and I sold immediately, made over 10M when I was quite young, like that. But nowadays, you see nowadays, I don't know what is happening. Even these circles, their lands are really overpriced. It's not like those days. Those days I would go and buy land and I mean, keep it from a circle. Keep it, we buy at 700, we keep it a few years like that, we sell for 3 million. Nowadays, whatever they sell to you, it'll be very hard for you to even dispose at a higher price. So, you know, you'll get, ladies and gentlemen, so many people complaining that we don't have money, we have not gotten a job. But in most cases, people do not know how to manage funds. Most of us have left this alcohol spirit to take a toll on us. Is there anybody here who has a brother, a sister, or even a father, or even a mother who is really into excessive alcoholism? Yeah, even myself in my family, we have that. You just get somebody who got an A plane, a B plus, whatever, but for some reason, they just get into things that they cannot be able to go back. And then they will come to realize themselves when they are 50 years plus. I'm not saying that you don't take alcohol. I'm not your priest here. I'm not your pastor here. But please, regardless of what you are taking, let's take those things in moderation. Let's take those things in moderation. Yeah. Let's take those things. Okay. Yeah. Depends on the background. Cool kid. No. I always work very hard. Have you ever seen somebody, you see, like me, for many years, I don't have a weekend. Like now I have these classes today, I'll be having these classes tomorrow. All my evenings are really booked. And then of course, the other thing that helped me, you know me, I got good jobs very early. I worked with this company called Arrow. Also search for it. It's a Swedish organization for many years. And over those many years, my salary used to be over 1 million shillings, over 1 million shillings every year. Until I realized, hey, this RCM has peaked. This RCM now has over 3,000 students. Now we're about 4,000. Let me now jump from there. I come and manage RCM 100%. So also you have to be very aggressive at a young age to get jobs with these multinational companies. They pay very well. They pay very well. But you must work very hard. You must work very hard. You must work very, very, very hard. So there is somebody who wants me to take them for a house tour. You are sick. Will you also take me for a house tour? Yeah, in your own house. Will you also be able to put on your camera and then you take us around? If that is okay, then tit for tat. I'll be able to do exactly that. So then we have here, yeah, asset based, already you have seen that. I'm almost finishing because most of these things are what, yeah, they're repetitive. So 12.4 concept of interest and interest riba. Interest is haram. The kind of returns we want are those returns which are profit sharing. Sources of finance in Islamic financing. We have equity based. Yeah, equity where you have shares. What we call kushirikiana musharaka, joint venture. And then we have mudaraba, trust financing. So equity based, we have musharaka. Musharaka is a joint venture where Chris and Joshua will contribute capital and then they run the business together. Then we have mudaraba. Mudaraba is where I will trust Chris, who has business acumen, to run this business like 100%, which I'll provide capital. Should we make a profit, we share profits. And a mudaraba, should we make a loss, the rich person takes up the loss. Then we have trade-based. Trade-based is for trading. You're buying something from me, you go and sell. Yeah, so we have murabaha. Murabaha is cost plus sale. So under murabaha, I will sell to you. I will help you if it's a vehicle and a bank. I can buy this vehicle at cost, $1 million. And then I give you this vehicle. Yeah. So what you'll do is to refund me the cost. And because you're going to use this vehicle to do business, you must add something on top. But whatever you're adding on top is not mandatory, is not interest. Yeah. So it is called cost plus. Cost plus sale. And then we have what we call istisna. And istisna, ladies and gentlemen, we shall be able, like you, if you have read about this Mombasa. Mombasa, we have a very big platform over there being spearheaded by the governor. Yeah, they have a big construction venture. Where in this case here, they are using this istisna. There is a bank there, a Muslim bank. So under istisna, the bank will buy this house on your behalf. So the bank buys the house and then it sells the house to you. So the bank must first of all take ownership. Yeah, it must take ownership of these premises and then they sell their house or they lease the house to you. So istisna, as we shall be seeing later on, I'll be discussing this, is very, very similar to salam. Yeah, where in this case here, they do what we call forward purchase. So under forward purchase, this is where, for example, people are starting to build up this particular house and then you buy it even before, at the very inception stage. At the very inception stage. Yeah, what we call plan. You buy at the plan stage. All right. So then we have leasing based, ijara, leasing based, leasing finance. We have sukuk bonds, Islamic bonds for long-term capital raising. We have wadia, safe-keeping deposits. You could be having lots of money in the house and you don't want to take this money to Equity Bank because the Equity Bank will give you interest. So we have what we call wadia accounts. If you have seen, Barclays has this, ABSA nowadays, wadia. You simply take $1 million and then that 1 million, if they do business with it and they make a profit, they add a profit on top. Yeah, safekeeping deposits. And then we have takaful, what we call cooperative insurance. Types of Islamic financial products, very similar, muraba moja. So in this case here, they assist you to buy an item and then you go and sell. When you make some profit there, so you shall be able to refund back the cost plus. So this is cost plus sale for goods. E.g. in car financing, I can finance you to buy a car at $1 million. So once you buy this car at $1 million, ladies and gentlemen, during return of the money, you'll give me this $1 million plus. Ijara is leasing of assets. Musharaka tunashirikiana, joint venture, capital contribution, and then we run the business, all of us, and then we share profits and losses. That's musharaka, kushirikiana. Then we have mudaraba, profit sharing partnership. Losses are normally taken by the big boss. Under mudaraba, remember we have the big boss, who is providing capital, and then we have in this case here, this other smaller boss who is only running the business. Yeah, should we make a profit out of this business venture? We share profits. Should we make a loss? The big boss, the one who provided capital, takes up the loss in full. Sukuk, Islamic bond backed by assets. Takaful, cooperative insurance model. Wadia, safe custody deposit account. Istisna and Salam, pre-production or agricultural financing. Pre-production. So we are able to buy these things in advance for you. We are able to produce them in advance for you. And then, of course, if it's agricultural finance, like we have Kericho. Kericho right now, all these farmers who have got tea, yeah, they are able to get into what we call salam. It's called salam, wanakusalimia. So under salam, if, for example, you know you'll be getting a bonus of $1 million, you can easily go to this bank and tell the bank, hey, I'll be getting a bonus of $1 million. Nisalimie, you pay me something, give me a loan in advance. Give me a loan in advance. Of course, they won't give you $1 million exactly, can give you like 300, 400, like that. So istisna and salam, pre-production or agricultural financing. Great, I can see charts here. Yeah, please feel free to chat. Feel free to chat. Yeah, UN bodies, yes, very good. Oh, no, but that's very wrong. Yeah, we got very good mentors like myself in this case here. I had Dr. McPhee. Yeah, nowadays it's really old. Yeah, this guy was able to tell me that as you're doing civil engineering, be doing CPA by the side. After I finished CPA, no, even before that, he also told me that for you to be able to command the world, you must be very good in Excel. That is why up to date, actually, that's how I got my job at Arrow. There are very, very few people who can manage this Mwalimu here in Excel. I'm able to do financial models. Like I did one for this insurance company that I would not name because that time I was working for Arrow. Yeah, for IFRS 17. A model where basically they come and put in premiums and put in a few things. You've been able to configure this, for example, if it is rent inside there, many, many things. So that at the end of the year, it'll only be about pressing the button. Pop, they have their P&L, they have the statement of financial position, like that. So Excel is really, really good. So after I finished CPA, told me now you cannot be a local champion. You must strive in this case here to be an international champion. Do ACCA. So I did ACCA like that. So yeah, mentorship works a lot. Mentorship works a lot. Yeah, Caroline, I've seen. I don't know whether Caroline, this should be. Of course, I normally give jobs whenever I get access. I'm able to share with my students. But Caroline, this should be really your own initiative. Yeah, you have to work. This is your work, Carol. It's your work, Carol. And then, of course, as I finish, because I need to go back to my Islamic finance. When did I do my CPA? I started teaching at Visions in 2001 when I was in CPA section 4, because I'd done my civil by then, section 4. So I was very good in QA. So I started teaching my fellow students, and then I was ahead like that. So I finished around 02 year, 2002, when I was still teaching. Yeah. Uh-huh. I can see very good questions. I wish we had a mentorship session. Then I would have been able to talk about a few things here and there. But now because we are not really in a mentorship session. Help, disaster. Tabi was not born by 001. Sorry, Carol, will be able to follow about this immediately after this class and then ask the CEO whether they should be able to extend, because this help should not be failing students. All right. All right. We shall overcome. Sorry for that. We shall overcome. Okay, good. So let's continue. So international standardization and regulation of Islamic finance, global standardization ensures consistency, credibility, and investor confidence through both religious and prudential oversight. So these one you're not supposed to master them really too much, though. So we have here the key international bodies, Islamic finance institutions. We have accounting and auditing organization for Islamic financial institutions. They come to audit them. It develops global accounting, auditing, and Sharia standards for Islamic financial institutions to ensure consistency and transparency. Then we have this IFSB, Islamic Financial Services Board, issues prudential and supervisory standards similar to the Basel rules for Islamic banks, insurance, and capital markets. We have International Islamic Financial Market, promotes standardization of Islamic financial instruments, especially sukuk and liquidity management tools. This is important for you. Islamic Development Bank provides Sharia compliant development financing for infrastructure, education, trade among member countries. Then with your permission, I'll be able to go to these past papers. Past paper questions. We start with April 2024, question number 5A. Would you want us to take a little break, a short break? 5 minutes? And then we come back, and so if it's 5 minutes, then we shall come back at exactly 9:23. 9:23. It's important, yes. It's important, yes. No, 10 will be too much because the class is supposed to end at 10. 5 only. 5 only. So you can see, like, for example, April 2024, question number 5A, examine 2 ethical issues that need to be adhered to in the marketing of Islamic products and services. Now, ladies and gentlemen, for example, when you look at some of these banks, so you look at some of these banks outside here, they'll be able to take very big billboards, tell you, welcome to our bank. And those big billboards, what are they putting? A very, very beautiful young girl. Very, very beautiful young girl. Maybe 21, 23, 24 years old. All right. So in this case, of course, somebody may be able to say there is nothing wrong with that, but there is even a specific word for that kind of marketing. All right. So in this case here, in terms of Islamic finance does not allow that. Islamic finance as well does not allow you to start saying that you are better of a bank than other banks, where you make those kind of comparisons. No. When you're marketing yourself, in this case here, market your products in a way that will be very, very ethical, very ethical, very ethical. All right. So you can see avoidance of seductive or misleading marketing. Marketing materials must not use seductive, deceptive, or immoral content that can lead to unethical behavior. Example, an Islamic bank cannot advertise on platforms promoting nudity, gambling, or alcohol. That's bad. So it is this concept of misleading. You can imagine, like, for example, we have some of these brewing companies making this kind of adverts that if you'd want to stand tall, if you would want to become taller, drink this and this. If you want micro power, we know there is nothing like micro power in those products. And you and I cannot be misled by those kind of statements. But what about our kids? A kid in this case here who is very short. Yeah. And then, of course, they're around Form 2, Form 3. Trust you me. When they keep on hearing that kind of a statement, one day they will try. Those are the kind of advertisements that Islamic finance does not allow. They're deceptive. You can't tell me that when I drink this, I become taller, knowing that you will not. You're cheating. That's not marketing. All right. Prohibition of marketing harmful or haram products. Products linked to activities harmful to health, intellect, or society are forbidden. Example, advertising alcohol-based cosmetics or promoting conventional interest-based banking is unethical. You cannot, in this case here, market harmful or haram products. Truthful and Sharia-compliant communication. Marketing information must be accurate, transparent, and free from exaggeration. E.g., a Murabaha finance advert must clearly state profit margins and repayment terms. Avoidance of advertising that causes social unrest. Promotion should not insult competitors, promote hate, or create division. Example, comparing a Sharia product by attacking another religion's practice is unethical. December 2023, question number 5A, which is question 2 in this. Describe 3 contracts applied to Islamic finance. 3 contracts, already have been able to see them. We have Murabaha contract, cost plus sale. The bank buys goods requested by a client and sells them to the client at an agreed profit margin payable in installments. Example, a bank purchases machinery at a cost of 2 million and sells it to the client for 2.3 million on credit. That's Murabaha, so cost plus. Ijara is leasing, it's a form of a contract called leasing contract. So the bank purchases an asset and leases it to a client for a fixed rent over a set period. Example, a bank buys vehicles and leases them to a transport company. The company pays monthly rent instead of what year interest. Then we have Mudaraba, trust-based, where I trust you. One party provides capital. Yeah, Rabul Mal, the big man, Rabul Mal, while the other manages the business, the Mudarib. Profits are shared, but losses are borne by the investor alone. Example, an investor provides Kenya shillings 5 million to a trader who manages an import business, profits to be shared 60 whatever. Musharaka is joint venture from the Kiswahili word kushirikiana. Both the bank and the client contribute capital to a project and share profits and losses in agreed proportions. Example, a developer and a bank jointly funds a housing estate and share profits upon sale. Then we have is TISNA, manufacturing and construction contract. The bank finances the manufacturer or construction of goods or property, delivering them after completion. Example, a bank finances the building of 10 apartments and transfers them to the client once completed. Yeah, they're also big in terms of what year, in terms of agricultural. If you remember Salam. Takaful Islamic insurance, members contribute to a mutual fund that compensates any member facing a loss. Example, Takaful Insurance of Africa pools members' contributions to cover fire or accident. Yeah, Sukuk is a very, very important type of a contract. Asset-backed securities, investors, giving investors ownership in tangible assets and sharing income generated. A government issues Sukuk to fund a road project. Investors earn from toll collections. April 2023, question number 3A, highlight 5 reasons for the increased popularity of Islamic finance in the recent what year past. Yeah, like myself, I've always been taking loans from, First Community, leaving these giants outside here. One of the things that will always make me go to these Islamic banks, they listen. You know, business can never be like 100% without bumps. You always hit a bump and you would want some kind of help. Somebody will listen to you. Most of these conventional banks, you fail to pay, like one installment, they'll be on your neck. And even how they keep on, after you fail to pay that installment, how they'll keep on now compounding the interest. It will be crazy. It will be very hard for you to run and catch up. Yeah, highlight 5 reasons for the increased popularity of Islamic finance. So, of course, awareness. Now, there are so many people who are aware that you don't even have to be a Muslim for you to be what here to become a member of, for example, Fast Community. So, promotes financial justice, encourage profit and loss sharing instead of exploiting borrowers with fixed interest, enhances financial inclusion, attracts Muslims and ethical investors who avoid interest-based systems. Ethical investment approach prohibits financing or harmful activities such as gambling, alcohol, and pornography. Improves financial stability because they are giving you money and encouraging you to buy assets. So asset backed and risk sharing nature reduces speculative crisis, promotes moral and social values, encourages social responsibility and community benefiting investments. If you go to Italy today, you'll be able to get a place where they've put aside for people to play football, play basketball. I mean, they really believe in community development. Expanding market segment. Global growth of Islamic banking provides new employment and investment opportunities. August 20, I can see chats here. Please always feel free to ask questions. Yeah, like now this one, yeah. Judy, thank you so much. This is really misleading that Red Bull got you wings. So a young man can be misled. This is deceptive marketing. Yeah, like Johnny Walker, yes, Kevin. I see now you can easily pick these deceptions from out there. All right. So August 2022, because I just want to answer all the Islamic questions. Yeah, explain 4 sources of finance as used in Islamic finance. You see, sources are the same as contracts in finance. They're the same as what here types. So same, Udaraba, Musharaka, Murabaha, Ijara, Sukuk, finished. If you also wish, you can add this Tisna, Salam, etc. December 2022, question number 5B, discuss 3 activities that are prohibited under Islamic finance. We have riba, investing in Islamic, or rather haram activities. Those are non-Islamic, they are haram. Yeah, investment in haram activities like alcohol, gambling, pork, or adult entertainment, those are prohibited. Speculation and uncertainty, garar and maisr. Excessive risk, speculation, or dealing in items not owned is forbidden. Yeah, question number 5, April 2022. Explain 2 differences between conventional finance and Islamic finance. This already we have done. So we have, for example, interest. Islamic finance prohibits this. Oh, these are the banks, conventional banks. They love interest crazily. Investment restrictions in Islamic finance will be prohibited from investing in haram industries, e.g. alcohol, gambling. In this case here, the other one permits all investments. I even believe illegal, but for the books, permits all legal investments. Ownership. You cannot sell what you do not own. That's a rule in Islam. You cannot sell what you do not own. Yeah. So conventional financing allows sale of unowned assets. Ladies and gentlemen, in Islam, you'll even realize that, it's very, very difficult for them, for example, these banks here to even engage auctioneers. Islam, once in this case here, you're not able to pay back your loan, these guys will even go to the community, asking in this case here, like your cousins, etc. Before they go to auctioning, it takes, that's not the asset really. This asset belongs to this guy. This guy has been able to pay up to 80%. We can't snatch this asset from him because of just 20%. Are there people who are willing to stand with this gentleman, giving him more time, even including adding them loans to be able to get their business is up? They really look at so many things. So in Islam, you cannot sell what does not belong to you. Yeah. Even for example, like when you want to buy land, like say in some of these Islam area, where there are so many Islam, even if they have agents, it will be very hard for an agent to discuss with you like the house is his. No. The agent will introduce the owner at a very initial stage simply because they also know that once you buy, then in this case, there is no way that very initial agent will be shortchanged. But for the Christians model, then automatically you will get, crazy. Yeah, allows sale of unowned assets, e.g. what here, for example, the auctioning process. Yeah, we have agency. Agency is big in conventional finance. September 2021, question number what year? Question number 4B. Examine 4 challenges of Islamic banking. We had already discussed this. Limited product range, fewer instruments than conventional banking due to Sharia restrictions, shortage of skilled professionals, few experts trained in both finance and Sharia, high transaction costs, compliance, documentation, and legal approval, increased costs, lack of global standardization, different interpretations of the Sharia costs, inconsistency, regulatory challenges. Most legal systems are designed for conventional banking. May 2021, question number 4A. Explain the following concepts in the context of Islamic finance. Takaful is all about insurance, cooperative insurance, where members contribute to a common pool to protect one another from loss. Example, members contribute to cover fire or accident losses. They want us to explain riba. This is interest, which is prohibited. Yeah, mudaraba financing. This is where we have, ladies and gentlemen, two parties coming together. One, in this case here, there are bullman, who has money contributes capital. Yeah. And then the other one, Mudalib, is able to run the business. Should they make a profit, then they share. Should they make a loss, there are Bulmal, takes up the entire loss. So a partnership where one party provides capital and another provides expertise. Profit shared as per agreement. Example, investor funds, a business run by a skilled trader. Then we have murabaha. So in this case, here, this is cost plus something. Muraba moja. Cost plus sale, where the bank buys an asset and sells it to a client at a profit. Then November 2019, question number 4, as I finish, describe 3 common financial products provided by Islamic finance institutions, citing how each product differs from that provided by non-Islamic finance. Yeah, which products are these? These are the mudarabas, remember. Yeah, so we have mudaraba profit sharing. Yeah. Bank provides capital to an entrepreneur who manages a project, profit shared, losses borne by the financial. Difference in conventional banking, you are given a loan, which will earn interest regardless of the performance. Musharaka equity partnership. So under Islam, bank and the client contribute capital and share profits and losses. Difference, conventional banks lend money with interest, not shared risk. Yeah. Then we have Murabaha cost plus. Bank buys an asset and resells it at a profit to the client on deferred payment. Difference, conventional banks issue loans with interest. No asset transfer occurs. No asset. Ours, conventional banks, we give you a loan with very strong covenants. Yeah. Because us, we only want interest. November 2018, question number 5A. I'm moving with speed, but I want to believe you guys are able to follow. Are we together really? Because I've already covered the entire thing. Are we together really? Great. Thank you so much. So highlight 4 circumstances under which investors might find it suitable to use an Islamic equity. Where in this case here, you'll be able to bring in an equity partner who is an Islam under these Islamic products. Yeah. So then if you're looking for that, what are the circumstances? Yeah, when pursuing long-term investment goals, when you bring in an equity holder who is an Islam, these guys will be in this business for the long term. Trust you me. There are people we have done business with. These guys, they give in their money today, tomorrow they start asking you, that's not Islam. Yeah, then go for Islamic equity if you're seeking for Sharia compliant investments. when desiring capital appreciation over time. Somebody will be able to grow together with. If it's land you've bought, wait, long term for this capital to appreciate. When wanting foreign investment exposure, while adhering to Islamic principles, especially when this Islamic equity is coming from a different country. May 2018, question number 4A. Explain the following terms as used in Islamic finance. Ijara, I know Ijara is a lease financing. The bank will buy this asset, then leases to you. You pay rent, not interest. Sukuk, these are Islamic bonds. So Ijara, Islamic leasing, a lease where the bank buys an asset and leases it to a client for rent instead of charging interest. Example, leasing vehicles or machinery for business use. Sukuk bonds, asset-backed securities representing ownership in tangible assets or projects that generate income. Example, Sukuk issued to finance a toll road. Investors earn from toll revenue, not interest. November 2017, question number 1B. Summarize 4 hindrances to international standardization of Islamic finance. Why is it very hard to get like Islamic finance in Kenya being exactly the same as Islamic finance in Somaliland? Yeah, different interpretations of the Quran and the Sharia. Variation in contract applications across jurisdictions. Differences in acceptable practices, e.g. Islamic windows in conventional banks. Linguistic and cultural differences. You must have heard of Shia Sunni. Yeah, Shia versus Sunni interpretations and terminologies. The languages, how they're being interpreted will really be very different. Cultural differences. Discuss 4 principles of Islamic finance: prohibition of interest, profit and loss sharing. This is big principle. Money as a medium of exchange, don't sell money. Money is never a commodity. Money cannot generate money by itself. Money is just a medium of exchange. Don't tell me that I'm selling to you this 1,000. When you return it as 1,200. Don't treat money as a commodity. Avoidance of haram activities provides financing and prohibits financing and lawful activities, e.g. gambling, alcohol. Elimination of uncertainty, garar. Contracts must be transparent and free from speculations like that. And now that marked the end of my class, ladies and gentlemen. I will want to share this handout with you now before you leave. Caroline, I doubt. Because like First Community, the guys who used to serve me for sure weren't Christians. But is there any harm by you trying, reaching out to them? No harm. No harm whatsoever. No harm whatsoever. No harm whatsoever. Actually, in the spirit of them also including other communities, you can go to them like this and they hire you. So then you'll do me a favor, because many times I will get students who will come complain that you haven't gotten this handout. Once you get it, please ensure that you are able to share it in the respective groups you find yourselves in. Otherwise, we shall overcome. Everything is okay. I'm sharing them here, yes. I'm sharing them here. And then now you guys will be able to share these out. Yeah. On WhatsApp. So can somebody in this case here confirm that they have been able to see the handout? And then if possible, please take an initiative of sharing this handout on your class.